All right, let's dive right into it. We're breaking down the TSE and U.S. markets from November 9th, 2024, a day where, frankly, a lot happened.
Yeah, definitely a lot to unpack.
Think of this as your personal market decoder ring. Will help you cut through the noise and figure out what really went down.
It's always fascinating to see how events, even across the globe, can impact the markets, from
Yeah.
tech forecasts in Europe to an election in the U.S. It creates this ripple effect.
Yeah, it really shows just how interconnected everything is. But let's start with the TSE, specifically the mining stocks. They were on fire. What's driving that?
Well, I think when you see gold and lithium prices surging like that, it usually signals a couple of things. Like the U.S. election, for example, all that uncertainty probably pushed some investors towards gold. It's often seen as, a safe haven during those kind of turbulent times.
Right, makes sense. And lithium, that's all about the electric vehicles, right?
Yeah, exactly. Countries are pushing for more EVs, so the demand for lithium, which is key for EV batteries, is going way up. That's why you see companies like Lithium Americas Core, they soared over 5%.
Right.
Investors are betting on that sector to keep growing.
Makes sense. And Barrick Gold, a major player in gold, they were up over 4% too. But one that I found interesting was Tech Resources. They had a good gain, like 3.8%, but they're not just gold or lithium.
All right, tech's a bit more diverse. They have copper, zinc, and steel-making coal, too. All those are essential for things like construction and infrastructure. So their gains probably reflect that mining is hot feeling, but also just the growing need for those materials as the global economy keeps, well, rebuilding.
So kind of a perfect storm for them in a way. Okay, so mining's booming, but then we look at the tech sector and things get a bit, shall we say, bumpy.
Yeah, bumpy is one way to put it. The semiconductor industry threw a curveball. ASML, European company, they're pretty much a linchpin in the global semiconductor supply chain, and they issued a forecast that was, well, not great.
And investors panicked.
To put it lightly, we saw a massive sell-off in semiconductor stocks worldwide. Market value plummeted by something like $420 billion, billion with a B.
Ouch, that's gotta hurt. And that reached the Canadian tech companies as well, right?
Absolutely. Companies like OpenTextCore, the software giant, and even Shopify, the e-commerce darling, felt the pressure. Both have ties to the semiconductor industry, so ASML's forecast definitely worried folks.
But it's interesting, even with that initial drop, the Canadian tech companies bounced back relatively quickly. Shopify ended the day up almost 3%, and Constellation Software, another big player, also closed in the green.
It's definitely an interesting development. Investors might be seeing Canadian tech as a bit more insulated from those global supply chain issues.
Or maybe they're seeing the strength of their core businesses,
Right.
the innovation, the adaptability.
Probably a mix of factors at play. It'll be interesting to see if that trend continues, if Canadian tech can really carve out its own space in the global market.
So mining's up. Tech is a mixed bag, but let's focus on a couple of standout performers on the TSE. Ballard Power Systems, they're in the fuel cell tech space, and wow, their stock went up over 7%.
Yeah, Ballard's surge is a good example of how policies and global trends can really excite investors. With the push for renewable energy getting stronger, companies like Ballard, who develop those clean technologies like fuel cells, are attracting a lot of attention.
Like they're betting on the future of energy, right?
Exactly. Investors think companies like Ballard will be a big part of that shift to a cleaner, more sustainable energy system.
Makes sense. On the other side, though, Canopy Growth, a big name in the cannabis sector, their stock fell 6.5%. What's going on there?
The cannabis sector, it's still going through a lot of growing pains, you could say, from regulations to actually making a profit. Huge potential in the long run, but it's a good reminder that some sectors are still in a volatile stage. Those ups and downs are pretty common.
So from clean energy hopes to cannabis struggles, the TSE definitely saw a lot of action. But let's shift gears now, head south of the border, check out the Dow Jones. What was happening there?
Yeah, it was a mixed bag down there as well, but
Right.
one clear winner was Apple. Their stock jumped a solid 4.5%, new product hype, you know, strong sales forecasts.
Apple, always Apple. But Intel, another big tech name, they didn't have such a good day, down 5%. Is that more fallout from the ASML semiconductor news?
It sure seems like it, yeah.
Yeah.
Those ripples are definitely being felt all over the tech world. Raises some tough questions about those chip giants, especially with competition getting tougher and tougher globally.
Yeah, that's a whole other conversation, right? But speaking of competition, amidst all the tech drama, Chevron just cruised along. Nice 3% gain for them. Does that tell us anything about oil and gas, with the whole push for renewables?
It shows how that energy transition is going to play out, right? It's not like flipping a switch. Demand for oil and gas is still strong, even with the momentum behind renewables. Chevron's performance, it really highlights that those traditional energy sources, they're still a big part of the global economy.
So even with all the talk about clean energy, oil and gas companies, they're not going away anytime soon. Okay, but we got to talk about the elephant in the room, or maybe the donkey and the elephant. The US election, and wow, the crypto world went wild.
It did. It wasn't just politics playing out. It had a real impact on the crypto market. Bitcoin surged over 8%, hit some multi-month highs, and Ethereum wasn't far behind, up a solid 6.7%.
So what drove that surge? Was it just the election uncertainty?
I think there's a few things, a perfect storm, you could say. Yeah, the election probably played a role. Investors get nervous when things are unpredictable. But there's also that idea of crypto as a hedge against the U.S. dollar,
Mm.
especially when there are worries about, policy changes or economic instability.
Mm. It's like when people lose faith in the traditional systems, they look for alternatives. And crypto, with its whole decentralized thing, kind of fits that bill, at least for some, but it's still, well, pretty volatile, right?
Volatility, it's kind of the name of the game with those newer assets, yeah. Plus, all the regulations around crypto are still changing. Adds another layer of uncertainty for sure.
So is investing in crypto a gamble or a genuine opportunity? Tough call.
Like anything else, it comes down to how much risk you're comfortable with and, making informed choices. You got to understand the risks involved with crypto specifically, do your research, and never invest more than you can afford to lose.
Solid advice. Okay, so we've got mining, tech, energy, even politics impacting crypto. But stepping back a bit, what's your overall take on the market's mood right now?
I'd say there's this cautious optimism, kind of a mixed bag. We've got global economic uncertainties, those geopolitical tensions, and yeah, the semiconductor worries are still there. But there are also some positives, like the resilience of some sectors, the potential for growth in areas like clean energy and tech, and, signs of innovation happening everywhere.
So a balancing act, weighing the risks and the opportunities. But how does the average investor make sense of all this, make smart decisions?
It goes back to the basics, understanding your own goals, how much risk you can handle, and your time horizon. And don't underestimate staying informed, getting different perspectives. It's crucial for navigating these, well, pretty complex market dynamics.
Knowledge is power, right? Especially when it comes to your money. Okay, so we've hit the highlights from the TSE and US markets, talked about some trends and opportunities. But as we keep digging into this week's market moves, I'm curious, what are your thoughts on how Canadian tech performed?
Yeah, the fact that companies like Shopify and Constellation Software ended the week in the green, even with that semiconductor news, that's definitely worth looking at more closely.
It's like they defied the odds in a way. What do you think that tells us about Canadian tech?
Well, it could mean that Canadian tech is maturing, becoming less dependent on certain global supply chains. Or maybe investors are recognizing those unique strengths, the innovation, the agility. They're focused on building those sustainable businesses.
But we also saw Open Text Corp. They're more established, and they took a hit. So maybe it's not just about being tech anymore, but being in the right part of the tech world at the right time.
Exactly. It's about understanding the nuances within tech, those specific areas and the subsectors that are driving the growth and resilience, and recognizing which companies are best positioned to adapt and thrive in this environment that's, well, constantly changing.
So for investors looking at tech, it's not a one-size-fits-all approach. It takes research and understanding what's really driving things. Now, let's go back to that crypto surge we talked about earlier. That election-driven spike was pretty remarkable. Do you think this could be a sign of what's to come for crypto?
It's definitely something to pay attention to. We've seen this before. When there's geopolitical uncertainty or economic worries, people turn to alternative assets, like crypto. It shows a growing distrust in those traditional systems and a desire for something more decentralized, maybe less volatile.
But crypto's history is full of volatility. Is it really becoming a more mainstream, reliable investment?
Ah, the million-dollar question, right? This recent surge adds to that debate for sure, but the regulations are still in flux and the technology itself is changing so rapidly. It's too early to say for sure if crypto will become that widely accepted safe haven, but it's a conversation worth having.
So for now, it's proceed with caution when it comes to crypto. But what other trends or developments should investors keep an eye on as we move forward?
One area I find particularly interesting is the relationship between traditional energy and renewables.
Ah, yeah. We talked about Chevron doing well, even as companies like Ballard Power Systems are attracting a lot of investor interest. Like we're watching the energy transition happen right in front of us.
Exactly. And it's not going to be a clean break from one to the other. We're likely to see a period where those traditional sources, like oil and gas, they remain important, even as renewables gain more and more traction.
So for investors, it's about finding that balance, figuring out which companies are in a good position to navigate that transition successfully.
Exactly. Yeah, it's about looking beyond the headlines, understanding those long-term trends, and identifying the companies that are innovating and adapting to this evolving energy landscape.
That's where the real insights are. Okay, so we've talked about specific sectors and trends, but as we wrap up this part of our deep dive, I want to get your perspective on a broader question.
No.
What does all this market activity, all this volatility and uncertainty ultimately mean for the average investor?
That's a great question and an important one, right? Because in the end, it's about how those broad market trends translate into decisions for people who are managing their own portfolios. And I guess what I would say is, well, don't let those headlines dictate your every move. It's easy to get caught up in the excitement when a sector like mining takes off or crypto makes a sudden jump.
Yeah.
It's easy to get caught up in the hype, definitely, that
Yeah.
fear of missing out, right?
Right. FOMO.
Exactly.
Okay.
And that's when you're most likely to, well, make those impulsive decisions that might not be the best for your, long-term goals. So what I always say is research, due diligence, and understanding your own risk tolerance. Those are key.
So if someone's listening and thinking, okay, mining's hot, got to get in on that, what would you tell them?
Enthusiasm is great, but don't just chase the hype. Look deeper. Look at the specific companies. Understand their financials, management teams, their environmental and social practices, all those things that show if they're sustainable in the long run.
So don't just look at the surface. You got to really understand what you're investing in.
Exactly, yeah. And that applies to any sector, really, whether it's tech, energy, even crypto. Don't just follow the crowd. Take your time, learn about it, assess the risks, and then make those choices that fit your own financial goals.
Be smart about it, not just reactive. Speaking of tech, we saw some mixed signals there. Any advice for how to approach that sector, especially with all the recent volatility?
Tech changes so fast. It's all about being strategic, selective. Don't think of it as just one big sector. Break it down. Look at those subsectors like cloud computing, AI, cybersecurity, e-commerce, and figure out which ones align with what you're interested in and your investment strategy.
Find those pockets of opportunity, those companies that are really pushing things forward.
Exactly. And don't forget diversification, even within tech. Don't put
Mm.
all your eggs in one basket. Spread it out, different companies, different subsectors. That's how you manage risk.
Makes sense. Okay, crypto, it's exciting, it's volatile, it's still a bit of a mystery for some folks. What's your take on it for the average investor?
Crypto is interesting, that's for sure. But it's not for everyone, definitely not for the risk averse. High risk, high reward, and the rules are still being written. If you're thinking about it, be careful. Really learn about it, understand the tech, the potential upside, but also, those significant risks.
And like you said earlier, only invest what you can afford to lose. Don't risk your financial well-being for, well, for a gamble, no matter how tempting it might seem.
Exactly. Beyond those specific sectors, I think there are some basic rules, kind of investing fundamentals that everyone should follow no matter what's happening in the market.
Okay, I'm listening. What are those golden rules?
Well, first and foremost, diversification. Don't put all your eggs in one basket, like we said. Spread your investments around different asset classes, stocks, bonds, real estate, even those alternative investments like precious metals or art.
So if one part of the market takes a hit, you're not, well, completely wiped out.
Exactly. Another one is patience. Investing is a long game. Don't panic over those short-term ups and downs. You got to stay focused on those long-term goals and just ride it out.
Stay the course, trust the process. Don't make decisions based on emotions just because the market's being a bit crazy.
Yeah, exactly. And lastly, never stop learning. Markets are always changing. New tech comes along. The global landscape is always shifting. Stay curious, look for different viewpoints, and be ready to adapt your strategies.
So be a lifelong learner. Keep seeking out new knowledge and information. That's how you make those informed decisions.
Well, we've covered a lot today, from the TSE's mining surge to how the U.S. election impacted crypto. It's been a wild week in the markets. Any final thoughts?
Just remember, investing is a journey, not a destination. There will be bumps along the way, but with the right knowledge, a long-term perspective, and a willingness to adapt, you can navigate those markets and build a better financial future for yourself.
That's a great note to end on. Thanks for joining us on this deep dive, everyone. And until next time, stay informed, stay curious, and happy investing.